Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, April 10th, 5:19 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Revere Roundup Daily Market Insight video. Market state, we continue to be in a harsh correction as defined by 12 to 20% off of the recent highs in the S&P 500. No changes to the trend gauge over here. The detested four red arrows continue to show, meaning zero market leadership, and the major index is trending below their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. So after a near historic big up day yesterday on a 90-day delay on tariffs for most countries, excluding China, the question was, is that just a short squeeze, or would there be more good news for the remaining bulls? And the bears ended up winning the day. Absolutely no follow-up from Wednesday's big up day. The only bright spot is that the S&P was down about 6% at one point, only ended up down 3.5%, but not what you wanted to see if you're a bull, and the bond market continuing to have a big play a big role in what stocks are doing as yields and stocks moved basically in lockstep opposite of each other during the day today. We gapped down at the open, put in a high of the day basically right out of the gate, faded, a couple bounces intraday. Here are the numbers. The big eight down an average of 4.8%. The RG8s, our 8 growth ETF composite, down 4%. S&P 500 down 3.5%. NASDAQ 100 down 4.3%. We'll take a look at the rest of the indexes when we look at the charts. No good news there either, though. Global 60/40 stock and bond down 1.9%. Our flagship GROTECTION portfolio down 0.78%. Let's get into the charts, and I'll turn off stochastics here. And here you see, so the really coming into today, there were uh, three levels that we were watching, three short-term levels. The magenta line on here is the 8-day exponential moving average, which the S&P closed above today. Ideally, we wanted to hold that today. Another level we were watching is 5-day simple moving average, and halfway into yesterday's candle. It's typical for price to retrace half of a move and find support there. That is where we found support, a little below half of yesterday's range, and also held the 5-day simple moving average, but not the 8. So inside day after a massive range. The only thing we're doing is some tactical moving around, some shorter term trading in not in individual names, but in our indexes and our hedges that we hold. But let's look at a 5-minute chart very quickly of the S&P, and you can see the gap down, the high of the day put in, ugly morning, better afternoon, base down, and then a bounce into the close. So 5,300 was support early in the day, resistance late in the day. So very short term, that's a level that we're watching. You can see that played a little bit of a role during yesterday afternoon's pullback as well. So keep an eye on that 5,300 level. Let's go to the NASDAQ 100 next. Same situation, bounced a little more than halfway down, closed below the 8 EMA, but above the 5 simple. That's not shown on this chart here. One of the conundrums when you're in a market that's trying to come off the lows is where you're hoping, obviously, if you're a bull, for some strength above these shorter term moving averages, the 8 and the 21. But very often what you end up seeing in hindsight is that declining 21 day, sometimes the declining 8 day, ends up acting as resistance, and it's better to actually put a short on at that level. Conversely, when things are coming off in a market like this, and that's what we did today, is take off a little bit of the hedge into the extreme oversold intraday conditions. Um, I both on Turbo and on Grow, we did that today, and then on a bounce, we closed the Qs in GROTECTION just to cut the loss. We put that on yesterday, but it didn't hold the eight. We were out with about a 2.5% loss on that position. Let's go to equal weight S&P 500 below the 8-day exponential moving average as well. Dow Jones Industrial Average down the least 2.5%, but 8-day could not get back above or stay above the 8-day exponential moving average either. S&P 400 mid cap below the 8 EMA as well, inside day there, and the Russell 2000 didn't even touch the 8 EMA intraday today as it gapped down as well. On to the VIX. VIX ended up 21% at 4072. Just crazy volatility. The average true range on a 21-day basis for the S&P is at 3%. I didn't see it that high during the entire 2022 bear market, and the ranges and the volatility are just crazy. It'll tick up from 3% since it was wider than that today. Next to the dollar, and the dollar showing some extreme weakness, making a lower low during this process. Beneficiary of that is gold as it gapped up and closed near the highs of the range. Gold stocks also with a new high close, and silver up less than 1%. Silver has the industrial component to it, not just store value the way people see gold. So that's the reason, ostensibly, why that's underperforming. Bitcoin down 3.5%, sitting on the 200-day moving average. On to bonds, and this is a problem. Bond prices dropping, not below the lows of yesterday, but down 0.8%. TLT down 2.7%. That means the yields ticking up after a false breakdown in yields last week, up obviously on the 30-year and the 10-year higher as well. That's our inter-asset correlation. Let's go to the tail of the tape. Stochastic's beneficial because we're oversold on the daily charts on the major indexes and the RG8, but with the volatility, it's a secondary indicator and really isn't counting worth a whole heck of a lot. Fear and greed at an 8. Bulls ticked up AAII to 28.5, and still near that 60 level for bears. NAAIM ticked up to 57. CPI came out, and this was at least some good news, as it was well below expectations, but the market didn't benefit from it at all. We've also got PPI on Friday, but the message from this is that, at least right now, inflation does not appear to be an issue. He's coming into today. Would we see any follow through to yesterday? Absolutely not. Any leaders? Not really. We'll take a look at some double bottom bases that we've been keeping on our watch list, as that's the setup that the overall indexes are giving, and a lot of decent fundamental names are given that ugly. Some of them very ugly, but they're double bottoms nonetheless. Day count from up one to down one, back below the 8-day moving average, 12 days below the 21-day moving average. From a sector standpoint, gold, and silver stocks, and XLP, that's staples, up on the day. The other 10 of the 11 spider sectors down, led to the downside by semiconductors and oil. Only position left in GROTECTION, SPLG, 0.19 adjusted beta. 0.33 balance at risk with the sale of the Qs and trimming the hedge. Bottom line of the day, deep red day, no follow-up strength after Wednesday's huge up day. Keys will be watching Friday, those short-term levels that I mentioned from yesterday. That's the 5 simple, the 8-day exponential, and the midpoint of the 4-9 action. Let's go to some charts, and we created earlier in the week a list of some double bottom bases that were being set up. Let's see what kind of progress they're making. Some of these are not showing on pattern recognition because the midpoint is too far down from the top of the base, so they're showing as flat bases. So obviously, if you're keeping a list, anything that's above the 21-day moving average gets an A, but really a B because not too many of them are also above the 50-day moving average, as for the most part, the 21-day is below the 50-day in a lot of what we're watching. But watching those averages and also, of course, the relative strength line as always. So CyberArk there is one. Palantir, another one, looking decent. This is probably one of the best stocks out there, definitely in the top 5 on our watch list. Netflix, you can see the double bottom base is showing there as it meets the program criteria and relative strength at a new high. Dash also showing up as a proper double bottom. Spotify also showing up as a proper double bottom. So if you're a bull, what you're looking for is, we always say we want these bases to be set up, and we're getting that if the indices can just right themselves and we have a follow through day and these stocks that are looking decent power through the 21, the 50, and the pivot, we'll actually have some things to buy. We are 4 days. This is rally attempt day 4, despite the turmoil in the market. We do have rules that we follow, and we're going to keep an open mind for whether or not we end up pivoting and going short or shorter and taking off at least the tactical long that we have, or if we'll flip the other way and the market will tell us with big volume breakouts of some of these double bottom bases that it's time to dip a couple toes in the water. Hood, see the double bottom there too, not strictly not showing up. Bros, good stuff. CrowdStrike also looking good. Doximity, kind of disappointing, no relative strength this week. WGS, double bottom setup there as well. Rubric showing on pattern rec there. Penumbra also. LTH also. Costco, really just kind of a relative strength one, not really a double bottom, but poked its head above the 50-day today before retreating. Visa, Boston Scientific, Eli Lilly, lagging relative strength. MNDY, Tapestry, Nutanix, Palo Alto, Toast, Carpenter, Cloudflare, Expedia, Carvana, and NNE. Also, some others we've been watching. GEV, uh, showing some relative strength. Ollie, just from a pure double bottom formed before any of these other recent ones did, but then failed breakout, hit your 8% below the stop, but still holding up and was up 3% today. And Ollie and Celsius also acting extremely well. Tight action, a lot of overhead supply, but definitely showing relative strength. So there's about 30 names that we're keeping an eye on. Good to see those double bottom bases setting up. If you take a look at the S&P 500, it's really this. There's the double bottom here, ugly bottom, but the names that we're looking at didn't drop relative to the midpoint as far as the S&P 500 did. But that 57.87 would be your pivot and a double bottom for the S&P 500. Very similar setup on the NASDAQ 100 as well. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email me or my partner, Dan Stewart, dan@revereasset.com. And as we emphasize every night on these videos, our flagship portfolio is named GROTECTION, designed to grow assets during uptrends, get the heck out of the way during downtrends. A lot of people saying this isn't a bear market because we didn't officially close 20% off of the recent highs. We've poked our head below the high minus 20% at least twice intraday. And we hit minus 20% on the NASDAQ and small caps as well. Take it from me, whether or not it's semantics to say this isn't a bear market, it absolutely is. That doesn't mean that we won't keep an open mind to possible strength and a follow through day and some of those double bottoms breaking out. And that'll wrap it for Thursday, April 10th. This is Don Vandenbord with Revere Asset Management telling it like it is. Thanks for listening and have a great day.